my dance, make it hurt.
Good day, everyone. Welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Community Edition. I'm your lovely host, Dominic Green, Managing Partner of Atenico Commercial Real Estate Services here in the DFW area. And again, welcome for everybody that's returning. And for those that are new, this is a platform where we have a discussion about investing in commercial real estate, the different sectors, kind of giving an introduction, where we all come together, collaborate with our relative different experiences in commercial real estate from a professional standpoint, ownership standpoint, research, analysts, you name it. It's just about us coming together and leveraging our collective knowledge for the purpose of acquiring commercial real estate to, not only provide a service, but also in return obtain a profit and cash flow to fund the things that are most important to us, whether that's family, charities, generations, you name it, things that are most important to us. Because at the end of the day, I believe that commercial real estate is one of those strong vehicles from an investment standpoint, especially in our community. Doing stuff that I do on a daily basis. I see others that don't look like us that own commercial real estate. And when I'm helping these businesses sign leases, I know they're making plenty of money. So it just just having this platform to come together and have a discussion. As always, part of what I do is, learning, getting the experience, and now, really being more active and looking for opportunity to acquire, partnering with people that have the same, same goals as mine, to build something long term and have a platform, and then to fund other things as well, to support our community. There's people that invest in stock, there's people that invest in real estate. I don't think as been said before, it's not a either or, it's a and. We need to be doing all of it. But for me, I think the foundation is in commercial real estate, and then from there, the sky's the limit. So in today's episode, I don't want to keep you guys long. I just wanted to talk about something that came to my mind because I have a young sister that's about to graduate here, and it just brought me back to looking at student housing, right? So, I always talk about there's, investing in niches, looking for opportunity. And student housing is one of those things that I had, years ago when I was at UT, experience, because I was, on the property management side while I was in school. So that gave me, unique insight and stuff like that. But, student housing, if you look at it historically, it's been one of those resilient investments. However, with the pandemic, there's been some challenges, obviously, because they closed a lot of the campuses, around the U.S. International students were probably restricted in the most part, to come to the U.S. because of COVID. So you had a lot of, students doing virtual. But here's the interesting thing. And, when I talk about, commercial real estate and stocks, one of the companies that I actually work for actually invested, bought some shares of it during the dip last year, I believe. But nonetheless, they specialize in student housing. And so, reading some of the reports here, a lot of the tier one schools, and for those who know, tier one schools are categorized in a sense as schools with, student enrollments of about 20,000 or more, and tier two is around 15 to 20. So the best example I can give you is like your tier one schools are kind of your Power Five conferences. So think your Ohio States, your USC's, your UT's, um, your Floridas, your Tennessees, and stuff like that, right? So just kind of think of those type of schools, um, and then I guess you probably put your tier two into probably like your Baylor's and stuff like that. But nonetheless, um, well, not your Baylor's, but probably your Texas States. But nonetheless, looking at the reports, a lot of the tier one schools, from a collection standpoint, still receive about 90% collections, which on a previous video when I talked about multifamily, they were still collecting roughly about 95% of rents. Um, and then you got to think about it. For most students, um, you know, who didn't live on campus, lived off campus. Anyways, I mean, they didn't go anywhere. They just stayed where they were, and they did classes remotely. Some maybe went home, but I think probably majority of them actually just stayed because student housing is unique. It's challenging too. I can just tell you that from experience. So with student housing, you're essentially renting by the bed. So they're purposely built. Like the one that I worked at was a 4x4. So essentially what that means is you had 4 bedrooms with 4 individual bathrooms, and then you had a common area, which was the living room, right? And then the patio and stuff like that. So you have stuff that's 1x1, 2x2, 3x3, you name it. Different cutouts and designs, because one thing that draws people, it definitely drew me, from being on campus where you had to share, the showers, bathrooms, and stuff like that, to now going off campus and having your own private bathroom was a big draw. And then obviously being on the route, the bus route and stuff like that, because I didn't have a vehicle at the time. But, um, most of those kids stayed. Um, so you have some of the resiliency. College is still being pushed as an opportunity, whether or not that's going to be long term. Things are changing. The way we consume information is changing. The way that the debt crisis for students is real. Um, but nonetheless, people are still enrolling in. Students are still graduating and enrolling in college by the tons. International students are still coming to America for learning. So there's a trend that's going to probably continue to stay, and you just gotta definitely do your due diligence. But the properties that were of most value are the ones that are closest to university, because a lot of these universities, especially like UT, there's only a certain amount of on-campus housing, and so typically the requirement is for the freshmen to stay on campus, and then after that, you can do what you want to do. But there's only a certain amount of land that the university owns, and there's a certain amount of facilities available for students. So, typically, once they reach capacity, you still got your juniors, your sophomores, your seniors. They still need to live somewhere, so they got to stay off campus. And so the properties that were close by, the closest to universities, were the most valuable, because essentially you still walk to campus. I mean, that's a luxury. You still get to the things that, the restaurants and go to the events and stuff like that. Everything was still nearby. And then you have your kind of like your second level, which were your properties, like in Austin, Riverside and stuff like that in West Campus. But Riverside mainly, where I was at, you were on the bus route. So the buses would come there early. You'd be at the bus stop. They were there traveling, I want to say, every maybe 10 minutes or so. There was a bus. So, it made it effective to where you could still kind of get that same experience, get on the bus. Bus ride wasn't that long to get to campus. And then, you go from there. So those were kind of the next opportunities. And then you have stuff where people were maybe have their own vehicles and they wanted even cheaper rent or so forth and so on. They stayed a little bit further out. But in that kind of that order, of opportunity and of value, that's kind of how I saw it and experienced. So, but I say student housing is unique. They did pretty well according to reports I was reading. especially your tier one schools. Pre-leasing was over 75% for a lot of these tier one schools here recently. But let's talk about, like I said, more of the uniqueness. When I was talking about you're renting by the bed, property management is important. Amenities is important. I know, electricity, because typically, everything was all included in your rent for the most part. I know some have kind of changed where they're kind of, doing like traditional, where, your electric and stuff like that is paid separately and it's not all inclusive. But nonetheless, your utilities were included in your rent. Your, like I said, internet was a big thing. You had areas where you can congregate, study. Obviously, the pool was a major factor in events and stuff like that. But the thing that you got to pay attention to when you're investing in student housing, for those that are interested, obviously location, real estate 101, right? The closer you are to campus, to me, is the easier is the lease. And the further away, the harder it is. Because what's evident is you saw a lot of these properties that were really far away, that had students that were trying to be all students, end up diversifying and just becoming half students and half, people that just live in the area or worked in the area or worked nearby. So, one thing I can tell you, definitely from experience, turnover when you invest in student housing is high. What I mean by that, so it's a semester thing. So if we would usually start the pre-leasing early during the summer, pushing really hard. And this is also the same time that we're doing the turn, which basically means, the students that were leaving, where the lease was up, weren't coming back, graduated. We were pretty much turning over almost the entire complex in a sense. And that basically means we were going in, see what needs to be repaired, see what needs to be fixed, and then, scheduling the contractors go in there. And I actually got an opportunity to do that at my role, when I was, and on the property manager side. So that was a unique experience. And that's kind of like almost really just sparked my interest in commercial real estate from there. But not to get too long-winded on that. Turnover is high. And the leasing part of it, you got to lease, especially if you're a student and you're purpose built for that. Because, students are registering for the fall. So if you don't secure your leasing during the fall, you're pretty much gonna be out of luck. Because once school starts, it's not a huge flood of people coming and enrolling. That time is already passed. So you have the potential to go from 100% occupancy or 90%, let's just say, to maybe 50 to 20%. It just depends. So you really have to be geared and focused and the market and all that good stuff for the fall semester to get those leases, because most of those leases are for for a full 12 months, because they're going to be enrolled the fall and the spring, and then some stay for the summer, some don't. But at least during that time period, you're going to have those students there. So it's important, very, very important to lease. So that's why we had bus tours, by the dozens come to the campuses where we would pitch our property, not only to the students but to the families. Reaching out to any and everyone. I mean, you name it, man. We were on the hustle to make sure that we were occupied and filled up. So that's one unique thing about student housing as opposed to regular multifamily. That's not necessarily a big issue. Then the other issue is the wear and tear. So as I mentioned earlier, I was talking about turn. So you have potentially a lot of people in an apartment unit. So there's a lot of wear and tear, carpets, paint, appliances, you name it. So you can just think of for a traditional multifamily, that has its uses of families, but now you have young students, individuals that are on their own for the first time, finding their way, and just what comes with the college life, um, events, parties, and stuff like that, get-togethers, you name it, on the weekend. So there's a high use of the units, which you have a little bit more above average, um, as far as like turn. So in essence, like I know a multifamily is roughly about 250 to 300 per unit. So I would say probably in because it's been a while, probably in student housing is probably double that. Just from experience, when we go in some of these units, man, there's all kinds of stuff. You'll be surprised that needs to be fixed, that needs to be replaced. I can just remember those days of doing turn. Uh, Crazy. But nonetheless, like I said, you're renting about a bedroom, so you're thinking about, like I said, a 4 unit. People paying, let's say, $600 uh, per bed. I mean, that's $2,400 a month. And you add those numbers up, right? So when you see those numbers, the numbers are very lucrative. The expenses, are going to be higher. Um, but it's one of those things that's a trend that that I think will stay for relatively long term. Um, but who knows? But I know, like depending on what your investment horizon. I mean, 10 years or so, colleges I think still be colleges. People still going for the experience, football and all the basketball stuff that draws people in the college experience, and then the education as well. So um, I think with the the story of people still staying on the sidelines, I've read that financing is still kind of tough, um, because everybody's still waiting to figure out how this COVID thing is going to impact the numbers going forward. But with that comes opportunity, because I know that from experience in 2008, when the Great Recession, whatever was happening, funding, finance, all that stuff was difficult to get. But that's when people who got creative um, found ways to raise money, um, end up doing the best. And as I say, money is made in all markets, but definitely a lot is made during downturns where things are most difficult. Lending is difficult. Looking for the opportunity is difficult. That's when the biggest gains are made. So, um, you know, I think, again, something to consider. Something we should have a discussion about. My preference is, if I was looking at investing in student housing, I want to be as close as possible to university. Well, first of all, I want to be at a tier 1 school, um, where the enrollment is high, 20,000 or more, so that I know that there's an oversupply of potential, and not necessarily demand on campus. And then I will look to see if the school mandates, freshmen, to stay on campus, or they're allowed to go off campus. I would also look at the graduates. What is the graduate enrollment? For the law schools and stuff like that with the program, because those graduate students, just from a turnover standpoint, aren't they're really studying, they're really trying to focus and get things done. So they're not going to be doing all the things that your sophomores and freshmen and stuff like that will be doing, until they get a little bit older. They kind of realize now it's time to get out of school. But your tier 1 schools, your Power 5 conferences, that's kind of what I would look at. Unless you went to those other schools that are tier 2 or below and you have an intimate knowledge, I wouldn't do any community college type housing. Most of those people that I've seen, especially in Austin, they lived in Austin. They just traveled. They stayed with their parents, or they went to some. Yeah, they lived at a different apartment further up north. So not necessarily a particular customer, I believe, for the type of student housing that's dedicated student housing. Um, and then, like I said, just being close. And then, one more thing I wanted to bring up, for as far as like the payments. So, um, a couple of things. A lot of times the leases are guaranteed by parents. So that means the parents is guaranteed that the rent's going to get paid. Another thing is that when you get when students get there, and this was for me as well, when you get your scholarship money, and stuff for all paying, if you pay your books, you have a portion for housing. That information we actually took from the students, that gets showed what the leftover amount was, And a lot of times students just once they got that money, they went ahead and just paid all their rent for up to a certain period of time they can pay it. So they paid basically by semester, fall semester and spring semester. Um, or some just spread it out. But the scholarship money was used toward that was part of guaranteed funds for living. Like I said, at the end of the day, real estate is nothing without people, and students are coming there to get education, coming to get experience. They're gonna need a place to live, and like I said, with a limited amount of space on a lot of these campuses, um, you know, there's opportunity there. And so, one of the biggest, I guess, keys I can give you guys is, I was talking about following the model, is to look at ACC. That's the stock that I bought into. It's American Campus Communities. I'm sorry. Just kind of, get an idea of what their metrics are, and using those metrics to create your own particular metrics if you're interested in investing in student housing. Because, like I said, I think long-term wise, to still be there. People still going to go to college. It's still being one of those things where there's maybe a 20 to 30,000 salary gap between those that have a 4-year degree and those that don't, on average. Although the people who don't have a degree make money, can make more money. So, I just think it's something to look at. Historically, it's been resilient. Historically, it's been an opportunity, but you got to have great management. You got to understand what you're buying, where you're buying it, the condition it is in, have the funds necessary for it. Like I said, the management team has to be excellent in leasing and experience. And then, you pretty much be all in. So, hope that was something educational, provide some insight. As always, like, share, subscribe, leave a comment. Let's continue the conversation. Join the Facebook group. I'm trying to grow that. If you guys are interested in working together, connecting, feel free to reach out. I'm looking for other, individuals to link up with. As I talked about before, one thing I'm working on now is finishing up my pitch deck, because I really think something along the lines of affordable housing, where not only can we, solve a huge growing problem, but also make a profit as well. Yeah. So, again, like, share, subscribe, leave a comment. Let's continue this conversation. Working together, collaborate together for a common goal. Cash flow, obviously. Wealth, obviously. Ownership. Ownership brings, leverage. Leverage brings power. Power allows you to make certain decisions. So, like I said, till next time, happy investing. Education Wednesdays. Let's continue to talk commercial real estate. Black people, let's invest. Peace.
These my dollars make it hurt.